Have you ever stopped to think about this? There's a massive difference between simply having money and being truly wealthy. Because here's the hard truth. Money is fragile. Your bank account can be frozen with the push of a button. Stocks you thought were untouchable can crash to zero. Even the currency in your wallet, the dollars, euros, or yen you use every single day, can lose its value almost overnight. History proves it. Fortunes disappear in just 3 generations on average. Families build empires, only to watch their grandchildren lose everything. And yet, some families manage to hold on. Think of the Rockefellers, still wealthy after 150 years, or the Rothschilds' wealth that's lasted since before Napoleon was even born. How did they do it? What did they figure out that most people miss? It comes down to one thing: stores of value. Assets that not only preserve wealth, but quietly multiply it across decades or even centuries. So today, I'm going to reveal the 7 stores of value the ultra-wealthy use to protect and grow their fortunes. We'll go from the most obvious to the most surprising, and by the end, you'll know exactly how to start building wealth that lasts. So let's dive in. Real estate, wealth you can touch. The first and perhaps most timeless store of value is real estate. But let me be clear. I'm not talking about buying the suburban house down the street and calling it an investment. Take Bill Gates, for example. Everyone knows him as the founder of Microsoft. What most people don't know is that he's now the largest private owner of farmland in America. Over 270,000 acres spread across 19 states. That's bigger than the city of Los Angeles. Why? Because real estate offers 3 unbeatable advantages. First, it's tangible. You can live on it, rent it, farm it. It's real, physical, and can't vanish into thin air. Second, it generates income, whether through rent, crops, timber, or appreciation in value. Third, it's scarce. Governments can print more money, but they can't print more prime real estate in Manhattan, Paris, or Tokyo. Scarcity alone ensures long-term value. This is why wealthy families diversify across different categories. Commercial real estate like office towers and shopping centers for steady cash flow. Residential properties in prime locations for appreciation. Agricultural land and timber for long-term resource plays. And of course, those $100 million penthouses and historic estates that combine lifestyle with legacy. For the wealthy, real estate isn't just a place to live, it's a fortress for their fortune. Stocks. Owning businesses that never sleep. The second store of value is stocks, but not in the way most people approach them. The average person treats the stock market like a casino, buying whatever's trending on Reddit or Twitter, hoping to double their money overnight. The wealthy take the opposite approach. Look at Warren Buffett. His portfolio isn't filled with flashy startups. It's built on timeless companies like Coca-Cola, American Express, and Apple businesses that have been making money for decades and will likely continue for decades more. These are called blue-chip stocks. They provide 2 things: stability, because people will always drink soda, swipe credit cards, and buy phones. Compounding growth, because these companies quietly increase in value year after year. The ultra-wealthy don't invest to get rich quickly. They invest to stay rich forever. They choose industries that never go out of style: food, medicine, energy, banking, and technology. The logic is simple. If society can't function without it, it's a safe bet. Owning stocks in these companies means your money is working 24/7, even while you sleep. Education. The wealth nobody can take. Now let's talk about a store of value most people overlook. Education. Think about it. Your house could burn down. Your business could collapse. Your money could lose all value. But your knowledge? Your skills? Your ability to adapt and rebuild? Nobody can take that from you. And that's why education is one of the most powerful assets of all. But here's the catch. Traditional education rarely teaches you the things that actually matter. How to manage money, how to build a business, how to create wealth that lasts. That's why self-education is the ultimate investment. Reading books on finance, studying the strategies of millionaires, learning about investments, and continuously sharpening your decision-making skills. Because the wealthiest people in history, from Rockefeller to Buffett, weren't just rich, they were learners. They treated knowledge like capital. And the truth is, your income will rarely exceed your level of financial education. So while other assets might be destroyed, your ability to generate wealth from scratch? That's eternal. Precious metals, the original wealth insurance. The fourth store of value has been trusted for over 5,000 years. Precious metals. Gold and silver have outlived empires, world wars, depressions, even the rise of the internet. They are universally recognized value. Why do central banks still hoard gold in giant vaults? Because when everything else crumbles, currencies, governments, markets, gold remains. It doesn't pay dividends, it doesn't generate income, but it provides one priceless thing: stability. A bar of gold in New York is worth just as much in Tokyo, London, or Dubai. no passport, no bank, no politics. It's global. That's why the wealthy keep gold and silver as a kind of wealth insurance. It won't make you rich, but it will keep you from going broke when the system shakes. Government bonds, the fortress of stability. The fifth store of value isn't flashy at all, but it's powerful. Government bonds. Here's how they work. When you buy a bond, you're basically lending money to a government. In return, they pay you steady interest and eventually return your money. Are bonds exciting? No. Are they sexy? Absolutely not. But are they safe? Historically, yes. During World War II, when Europe was burning, Swiss government bonds were considered a financial bunker. Investors knew Switzerland would survive, and so would their money. Even today, U.S. Treasury bonds are considered one of the safest assets on Earth, backed by the world's largest economy. Here's the key. When stocks crash, bonds often hold steady or even rise. That's why wealthy investors use them to balance their portfolios. Bonds won't change your life, but they will protect it. And in wealth building, sometimes defense is just as important as offense. Fine art and amp, collectibles, scarcity with a story. Now let's get into something fascinating. Fine art and collectibles. Why would anyone spend $100 million on a painting? Because there's only one. Scarcity. That's the magic word. Steve Cohen, one of the most successful hedge fund managers in the world, has spent over $1 billion on art Picassos, Warhols, Basquiat's, not because he's obsessed with pretty pictures, but because he knows these works are irreplaceable. And scarcity drives value. The same goes for collectibles. Rare watches, vintage Ferraris, luxury jewelry, even things like rare wines, sneakers, or Pokemon cards. These aren't just objects. They're cultural treasures, status symbols, and most importantly, limited. When wealthy people park their money in art, they're not just buying beauty. They're buying timeless value that exists outside the stock market. Cryptocurrency, digital scarcity. Finally, let's talk about the most controversial store of value, cryptocurrency. For some, it's the future of money. For others, it's the biggest bubble in history. But love it or hate it, crypto can't be ignored. Take Bitcoin. There will only ever be 21 million coins, ever. No government, no bank, no politician can print more. That built-in scarcity is what gives it value. Michael Saylor, the billionaire founder of MicroStrategy, has poured billions into Bitcoin, calling it digital gold. Unlike physical gold, it's easy to move, impossible to counterfeit, and resistant to seizure. Now let's be honest. Crypto is volatile. Prices swing like crazy. It's not for the faint of heart. But here's why the wealthy keep a slice of their portfolio in crypto. It's an uncorrelated asset. It doesn't move with the stock market, the bond market, or even real estate. And in a world that's going digital, it's a hedge against the old financial system. Will Bitcoin still be here in 50 years? Nobody knows. But if it is, those who got in early will have built generational wealth. So there you have it. The 7 stores of value the ultra-wealthy use to preserve wealth forever. Real estate, stocks, education, precious metals, government bonds, fine art and collectibles, and cryptocurrency. But here's the most important lesson. It's not about chasing flashy trends or showing off on Instagram. True wealth is quiet, steady, and built on assets that last. Remember, fortunes disappear in 3 generations when families forget these principles. The Rockefellers and Rothschilds are proof of what happens when you remember. So ask yourself, which of these 7 stores of value will you start focusing on? Because wealth isn't just about making money, it's about keeping it, growing it, and passing it on. If this video gave you new insights into building lasting wealth, do me a favor, hit that like button to let the algorithm know you found value. Drop a comment down below telling me which store of value you're most interested in. And of course, subscribe for more strategies on money, mindset, and building quiet wealth. This is the channel where future millionaires sharpen their edge. Don't just watch, join the movement. Until next time, remember, the only investment that truly lasts forever is the one you make in yourself. Thanks for watching, and I will see you in the next one.